Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine waking up not just to a company that's, well, surviving the relentless grind of inflation, but one that's absolutely thriving.
Right.
Envision a world where volatile digital assets aren't just speculative bets, but have been transformed into a corporate superpower, fundamentally rewriting the established rules of finance as we know them.
Sounds like science fiction, almost.
It does, but this isn't just some far-fetched concept. It's the engineered reality for a company now simply known as Strategy. They've managed to amass over 628,000 Bitcoin.
An incredible amount.
A digital treasure now valued at nearly $76 billion, all funded through truly innovative debt and equity maneuvers that have caught the rapt attention of Wall Street and beyond.
We've certainly got people talking.
But for you, the individual investor, here's the burning question. What if this isn't simply a bold gamble on a single digital asset? What if this entire strategy is the very spark of a corporate revolution, a seismic shift against traditional capital markets?
That's the big picture possibility, isn't it?
Today, we're going to meticulously unpack whether Strategy's unique playbook leveraging low-cost capital to strategically accumulate Bitcoin could indeed make your portfolio more resilient, perhaps even bulletproof, or if it exposes you to the asset's inherent and often dramatic swings.
It's a high-stakes game, certainly.
By the time we're done with our conversation, you'll have a profound understanding of whether aligning with this unfolding financial revolution holds the potential for generational wealth, or if it stands as a cautionary tale to learn from, especially as Bitcoin's price continues its remarkable ascent.
So, lots to cover.
To begin, let's peel back the layers and truly understand the extraordinary journey this company has undertaken. It's a fascinating evolution, moving from its humble origins to becoming the undisputed Bitcoin Treasury powerhouse it is today, all under the guidance of, well, visionary leadership.
Really is quite a story.
This company, now known simply as Strategy, actually started life as MicroStrategy, founded way back in 1989 by Michael Saylor and Sanju Bansal. Their initial venture was in the realm of business intelligence software.
Right. BI tools, helping companies make sense of data.
Exactly. They built tools that helped companies make sense of vast amounts of data, things like powerful analytics platforms and data visualization tools that were, for their time, quite revolutionary.
They were pioneers in that space early on.
They tasted early success, riding the wave of the internet boom, and went public in 1998. Their shares, astonishingly, soared to $3,000 during the dot-com bubble.
Incredible heights. But
as many of us vividly remember, that boom eventually turned to bust. The year 2000 brought a colossal challenge. The company's shares crashed a staggering 99%.
99%, just think about that. That's almost complete annihilation.
Now, for most companies, that would be the end of the story. But for Strategy, that pivotal moment, that truly difficult period, wasn't an ending. Instead, it became a crucible that forged incredible resilience and adaptability within the company's very DNA.
It seems they learned some hard lessons about market cycles.
They must have. The 2010s then saw a significant reinvention, with a strategic shift in focus to mobile business intelligence and cloud solutions, which helped stabilize their revenue around a consistent $500 million annually.
So they found their footing again in the software world.
This experience taught them to navigate extreme market volatility, a lesson that would become incredibly valuable later on.
What's truly fascinating here, and indeed a profound lesson for any investor, is how that past crucible experience directly informed their monumental shift decades later.
How so?
The real game changer, the moment that set them on their current trajectory, began in 2020. Amidst growing concerns over the unprecedented economic environment created by COVID-induced inflation and central bank policies.
A lot of uncertainty back then.
Exactly. Michael Saylor, with that deep understanding of economic cycles, initiated the radical acquisition of Bitcoin as a primary treasury reserve.
Not just dipping a toe in.
No, this wasn't just a small experimental step. It was complete and utter reevaluation of how a corporate treasury should operate. Their initial purchase was substantial $250 million.
A significant amount, especially for Bitcoin back in 2020.
A commitment that, at the time, was seen as wildly unconventional, even reckless by many. But look at it now. Fast forward to August 2025, and their current holdings have exploded to 628,946 Bitcoin.
Just staggering numbers.
This digital asset trove is now valued at an astonishing $76 billion, all acquired at a cost of $46 billion.
So a $30 billion unrealized gain, roughly.
Precisely. This strategic evolution has been marked by several key milestones, which really highlight the conviction behind their vision.
Like the rebranding.
For instance, the 2024 rebranding to simply Strategy was more than just a name change. It was a powerful declaration, explicitly emphasizing their singular focus on Bitcoin.
Dropping the micro. Makes sense.
And the financial impact.
Yeah.
Staggering. They reported a $10 billion net income boost in the second quarter of 2025, primarily from those Bitcoin gains.
$10 billion in one quarter from Treasury assets.
This kind of profit, stemming from a Treasury asset, is practically unheard of in traditional corporate finance. While their legacy business intelligence market share remains around 5%, a steady but relatively small slice.
Still important, but not the main story anymore.
The Bitcoin strategy has delivered a remarkable 3,000% stock return since 2020. This stark contrast illustrates the profound impact and the potential this approach has to fundamentally redefine how corporate treasuries operate, turning what was once a cost center into a primary profit driver.
A transformation of this magnitude, one that involves such a radical reshaping of a company's core identity and financial structure, doesn't just happen. It requires exceptional, unwavering leadership. Let's delve into the key players who have orchestrated this strategic pivot, and specifically how their combined expertise drives this unique model.
Absolutely. Leadership is critical here.
At the absolute forefront, of course, is Michael Saylor, the executive chairman. His background is quite distinctive, with a grounding in MIT aeronautics.
Which probably informs his analytical approach.
I imagine so. But what truly defines him in this context is his relentless, almost singular advocacy for Bitcoin. It's been the unwavering driving force behind the company's dramatic evolution.
He's certainly become the face of corporate Bitcoin adoption.
He was the one who initiated the Bitcoin acquisition strategy in 2020, seeing it not as a passing fad, but as a foundational shift in monetary policy and a superior store of value.
Yeah.
And it's not just about buying Bitcoin.
No, the execution is just as important.
He has meticulously overseen the raising of billions of dollars through highly innovative financial instruments like convertible notes and at-the-market offerings to fund these purchases. For example, we just saw in August 2025, they executed an $18 million buy of 155 Bitcoin.
Still accumulating relentlessly.
Showcasing their continued disciplined accumulation. What's particularly compelling for you as an investor is his personal commitment. Saylor holds over 17,000 Bitcoin himself.
Right. Significant skin in the game, as they say.
This isn't just a corporate strategy. It's a personal conviction, demonstrating significant skin in the game and directly aligning his incentives with the company's performance and, by extension, with your potential returns.
That alignment is definitely something investors look for. If we connect this to the bigger picture, the sheer strength of Strategy's leadership lies not just in Saylor's vision, but in the balanced expertise of the entire team.
It's not a one-man show.
Not at all. While Saylor provides that compelling long-term vision for Bitcoin, Phong Le, as president and CEO, brings vital operational expertise to the table. He has a strong background, including prior roles at XO Communications, which has been crucial in guiding the company's dual focus.
The software and the Bitcoin.
Exactly. On one hand, continuing to innovate with their AI-driven analytics software, and on the other, meticulously managing their rapidly growing Bitcoin holdings. It's a delicate balancing act.
Must be incredibly complex.
And his operational acumen, for instance, directly contributed to that impressive $10 billion net income boost from Bitcoin gains in the second quarter of 2025, demonstrating effective execution on both fronts.
So he keeps the trains running on time, so to speak.
Precisely. Then you have Andrew Kang, the Chief Financial Officer, who oversees the incredibly complex and innovative financial strategy. This includes the meticulous management of $8.2 billion in debt, which is a significant sum for any company.
$8.2 billion. Wow.
His role is to ensure that this leverage amplifies Bitcoin exposure to the maximum extent possible without compromising the company's liquidity or financial stability. A truly sophisticated financial tightrope walk.
A critical role. Managing that leverage.
The team is further bolstered by key figures like Wei-Ming Shao, Executive Vice President for Legal Affairs, who navigates the evolving regulatory landscape.
Always important in crypto.
And Reza Virasta, Executive Vice President for Sales, who ensures the continued growth of their software revenue. The board itself has been strategically strengthened, with the recent addition of Peter Brigger Jr. in July 2025 from Fortress Investment Group.
Bringing in outside expertise.
This adds significant external expertise and resilience to their treasury decisions, especially in times of market volatility. This diverse expertise across technology, finance, and digital assets hasn't just managed a strategic pivot. It has truly pioneered new financial instruments, like preferred stocks tied directly to Bitcoin yields.
That's fascinating. Preferred stocks tied to Bitcoin.
Yes. This potentially revolutionizes how companies access capital and manage their treasuries, pointing towards a future where digital assets are a core part of corporate finance.
Beyond the impressive numbers and the powerful names leading the charge, what truly defines strategy is its overarching mission, its ambitious vision for the future, and a distinctive culture that permeates every single decision they make.
Culture is often underestimated.
Their mission is crystal clear. It's about empowering organizations with intelligent analytics, providing cutting-edge business insights. But equally, it's about pioneering Bitcoin as a primary treasury reserve for corporate balance sheets worldwide.
The dual mission again.
Their ultimate aim is to become the world's largest Bitcoin holder, fundamentally redefining what corporate finance means and how it functions.
A very ambitious goal.
And their vision. It extends far beyond simple accumulation. It's about a future where Bitcoin yields, the returns generated from their Bitcoin holdings, drive perpetual growth for the company.
Generating yield from Bitcoin holdings. That's the next frontier.
Michael Saylor, for instance, vividly envisions strategy evolving into a Bitcoin bank, a groundbreaking entity that issues securities, like bonds or preferred shares, directly backed by digital assets.
A financial institution built on Bitcoin.
Imagine a company where its treasury isn't just a place to hold cash, but a dynamic, profit-generating engine. Their culture is not just talked about. It's explicit and deeply aligned with this vision.
How so?
It emphasizes relentless innovation, a carefully calculated and highly analytical approach to risk-taking within the crypto space, and remarkably robust employee Bitcoin education programs.
Educating their own staff. Interesting.
This fosters a pervasive HODL mindset, the idea of holding Bitcoin for the long term through market ups and downs from the very top of the organization down to every employee.
Getting everyone on board with the long-term vision.
This deep alignment is powerfully evident in events like Strategy World 2025, where artificial intelligence, their legacy business, and Bitcoin, their new financial core, converge, uniting efforts toward ambitious goals like achieving a 15-25% annual yield on their Bitcoin holdings.
15 to 25% yield. That's a significant target.
It's a culture built on conviction, foresight, and a willingness to challenge established norms.
You're absolutely right. This isn't merely about a balance sheet adjustment or a new asset class. It represents a fundamental philosophical shift in corporate thinking. This new philosophy influences every single aspect of their operations.
From top to bottom.
From how they approach software research and development, now often looking at AI applications for Bitcoin data, to their day-to-day treasury management, where every capital allocation decision is weighed against its potential to acquire or benefit from Bitcoin.
Every decision viewed through the Bitcoin lens.
The drive to revolutionize capital access through Bitcoin-linked instruments is deeply embedded in their DNA. It creates a cohesive, integrated approach where every part of the organization not only understands, but actively contributes to this dual mission of technological innovation and financial pioneering. It's a truly unique operational blueprint.
So, given this radical philosophy and vision, how exactly does strategy operate this truly unique two-sided business? It's a fascinating and complex blend of established software revenue, their legacy business, and a highly dynamic, innovative digital asset treasury.
It's like running two companies in one almost.
For you to truly grasp the essence of this company, it's helpful to visualize it like a dual-engine vehicle, with each engine serving a distinct yet interconnected purpose.
Okay, I like that analogy.
On one side, you have the business intelligence software engine. This is where they sell powerful analytics platforms, robust dashboards, and cutting-edge data visualization tools. These are the solutions that help large enterprises make incredibly informed decisions from vast, complex amounts of data.
The traditional, steady part of the business.
Think of it less like Excel on steroids and more like a sophisticated command center for a massive organization, providing real-time insights into every facet of their operations. This part of the business, while not generating the headline-grabbing returns of their Bitcoin holdings, is the steady, reliable engine.
Provides the foundation.
It provides consistent, predictable revenue.
And that steady revenue is absolutely critical because the other side, the Bitcoin Treasury management engine, is where the true innovation and indeed complexity lies.
Right, the more exciting, perhaps riskier engine.
Here, Bitcoin is not just an investment. It is explicitly treated as a primary reserve asset, strategically funded by both debt and equity. This approach, by its very nature, significantly amplifies exposure to Bitcoin's inherent volatility, which can be considerable.
You're definitely riding the Bitcoin wave.
However, it's also designed to serve as a powerful and proactive hedge against the long-term erosion of purchasing power caused by inflation.
So volatile, but also potentially protective long-term.
That's the thesis. To clarify some of the technical aspects, following crucial 2024 accounting changes, they now mark their Bitcoin holdings at fair value.
Okay, what does fair value marking mean exactly for the investor?
Previously, under older accounting rules, digital assets were treated as intangible assets and were only revalued downwards if their market price fell below the acquisition cost, which meant unrealized gains weren't reflected on the income statement.
So gains weren't really visible until they sold.
Exactly. Now, fair value marking means their Bitcoin holdings are constantly revalued to their current market price on their balance sheet, and the changes flow through the income statement. This provides a much clearer, real-time picture of their asset value and generates those significant reported gains we mentioned.
Makes the financials look very different, I imagine.
Very different. A helpful analogy for this hybrid model is to think of a savvy real estate firm. This firm strategically borrows money at low interest rates to acquire prime appreciating properties. Those are the Bitcoin holdings.
Okay, buying assets they expect to go up.
Simultaneously, they generate consistent rental income from office spaces within those properties. That's the stable software revenue.
Got it. The software pays the bills, the Bitcoin provides the potential upside.
This hybrid model is certainly more understandable for those already familiar with technology or digital assets, but the intricacies of their capital-raising strategies, particularly their at-the-market ATM offerings, and the potential for share dilutions, do warrant a much closer look for any investor.
Can you explain those ATM offerings a bit more?
Sure. An at-the-market offering is essentially a flexible way for a company to sell newly issued shares directly into the public stock market, usually over time and in smaller increments, rather than in one large block.
So they can raise money as they need it without a big announcement.
Exactly. This allows them to raise capital as needed, often capitalizing on favorable market conditions without the sudden impact of a massive public offering. But it does mean more shares outstanding, which can dilute existing shareholders.
Something investors definitely need to track. What genuinely sets Strategy apart and what makes their financial structure so compelling is their exceptionally distinct approach to capital allocation. They've ingeniously found a way to use their established business intelligence foundation to fuel an extraordinary financial engine, turning a traditional corporate treasury function on its head.
They've weaponized their balance sheet in a way.
The model, at its core, functions by generating consistent software revenue, which hovers around $500 million annually. This is absolutely crucial because this predictable cash flow serves as the bedrock for servicing their existing debt.
Covers the interest payments on those billions in debt.
It's the consistent underlying hum of their operations. Simultaneously, their massive Bitcoin holdings are not just sitting idly, they are specifically designed to drive explosive value and capital appreciation.
The growth engine.
For instance, they reported an astonishing $13.2 billion in unrealized gains year-to-date in 2025. It's a remarkable synergy, a stable, traditional business acting as a reliable foundation, allowing for and amplifying the highly dynamic, exponential growth from their digital asset strategy.
Strategy's approach is truly unique in its aggressive and, I would say, pioneering use of convertible notes and preferred stocks. For example, the $4.2 billion offering in 2025 was specifically designed to fund additional Bitcoin acquisitions.
So raising money specifically to buy more Bitcoin.
Yes. These instruments provide a sophisticated way to create significant leveraged exposure to the digital asset. To give you a compelling example of just how effective this has been, since 2020, this precise strategy has yielded over 25% annual Bitcoin growth per share.
Per share. That's impressive leverage.
This has significantly outperformed not just traditional investment vehicles, but even other companies that dabbled in crypto, like Tesla's brief foray into Bitcoin holdings.
Right, Tesla bought and sold relatively quickly.
This sophisticated layering of capital market innovation is what truly positions Strategy as a leading and arguably the most direct proxy for Bitcoin exposure in the public markets, but with the added potential for leveraged returns that pure Bitcoin holding wouldn't offer.
Beyond their financial structure, their core offerings are also continuously evolving, especially with the increasingly deep integration of artificial intelligence into their software platforms. And on the financial side, they are truly pioneers in creating entirely new kinds of financial products linked to digital assets.
They're innovating on both fronts.
The company's core offering remains its AI and business intelligence platform. This provides their enterprise clients with sophisticated dashboards, dynamic hyperintelligence cards, which deliver real-time insights embedded directly into a user's workflow, and robust cloud analytics capabilities.
So the software side isn't being neglected.
Not at all. This platform has achieved strong product-market fit, consistently recognized by industry analysts like Gartner, who named it a top enterprise BI solution for 2025. They're not resting on their laurels here either.
Who tier?
Recent product launches include Auto, an artificial intelligence bot for natural language queries, introduced in 2024, which boosted user adoption by an impressive 30%.
AI is everywhere, including their BI tools now.
Their product roadmap envisions even deeper artificial intelligence integration across all their software, along with the development of dedicated Bitcoin analytics tools, showcasing their continued commitment to innovation on the software side, even as their treasury grows.
It's important to understand that as a pioneer in corporate Bitcoin treasury management, Strategy isn't just a holder of Bitcoin. They're actively building an ecosystem around it, leading to unique financial products themselves.
Okay, like those preferred stocks you mentioned.
Exactly. These include preferred stocks, specifically designed for institutional investors, like their 8% Series A and 10% Series F. These aren't just typical preferred shares. They target sophisticated investors looking for a blend of fixed income stability with Bitcoin-linked yields.
So institutions can get Bitcoin exposure with a yield kicker.
Precisely. For instance, a substantial $4.2 billion at the market offering for their STRD preferred shares occurred in July 2025, demonstrating strong institutional demand for these innovative instruments.
$4.2 billion? That's serious institutional interest.
The future vision, as laid out by their leadership, involves developing even more sophisticated Bitcoin-backed securities, moving beyond simply holding Bitcoin on their balance sheet to actively creating yield-generating instruments from that asset,
turning the Bitcoin itself into a productive asset.
This provides investors with a tangible glimpse into the future evolution of corporate treasuries, where a company's digital assets can become a dynamic source of recurring financial innovation and profit.
So how does this incredibly unique dual-engine model actually operate on a day-to-day basis? And what exactly gives Strategy its formidable and increasingly difficult to replicate competitive advantage in the marketplace?
Right, the operational nuts and bolts.
Strategy maintains a remarkably lean operational structure. This allows them to stay agile and responsive, focusing intently on their core strengths while strategically leveraging global resources.
Lean and mean.
Their headquarters are in Tysons Corner, Virginia, but they operate globally, with key offices in Warsaw for essential research and development, London for sales, and various Asia-Pacific hubs providing regional support.
A global footprint, but focused.
They efficiently manage their overhead by primarily leasing their facilities rather than owning them, and by strategically outsourcing non-core functions, such as cloud hosting, to industry-leading partners like Amazon Web Services.
Smart use of outsourcing for non-core stuff.
This outsource model means they aren't bogged down by the complexities of managing extensive physical infrastructure, allowing them to remain highly focused on software innovation and, crucially, their Bitcoin strategy.
Their in-house focus is indeed squarely on software development and, just as importantly, on the highly specialized area of Bitcoin custody. When it comes to managing their vast Bitcoin holdings, they utilize advanced multi-sig wallets.
Okay, explain multi-sig wallets simply.
Sure. To explain what a multi-sig wallet is in simple terms, imagine a high-security vault that requires not just one, but multiple keys to open it, with each key held by a different trusted party. No single individual or single hack can compromise the funds.
So multiple layers of security, no single point of failure.
Exactly. This provides an incredibly high level of security and control over their digital assets. While there's relatively low vertical integration on the software side, meaning they rely on cloud partners and third-party tools, there's remarkably high vertical integration when it comes to Bitcoin.
They control the Bitcoin process themselves.
Yes, they control the entire acquisition and holding process themselves, which significantly reduces costs compared to relying on external custodians. For instance, their average Bitcoin acquisition cost stands at $66,000 per Bitcoin.
66,000.
A stark contrast to the current market price of $120,000. This lower cost basis is a direct result of their disciplined, direct acquisition strategy.
Buying consistently, averaging down effectively.
Their minimal physical supply chain, largely focused on digital assets, combined with this self-managed custody, significantly enhances efficiency over competitors that might rely entirely on third-party custodians like Coinbase. This integrated approach not only boosts investor confidence in their treasury operations, but also highlights a core operational strength that few, if any, other public companies possess.
In what is often a crowded and fiercely competitive market, Strategy has managed to carve out a truly distinct position. So what exactly makes them stand out so profoundly, and how do they aggressively defend that unique position?
Good question. They occupy a strange dual space.
It's a fascinating duality. In the traditional business intelligence market, Strategy operates in what's known as a monopolistically competitive environment, essentially an oligopoly with major players like Tableau and Microsoft's Power BI dominating.
Tough competition on the software side.
However, in stark contrast, they have pioneered a near monopoly in Bitcoin treasuries among publicly traded companies. They now hold approximately 3% of the total Bitcoin supply.
3% of all Bitcoin. That's huge for one company.
A figure that absolutely dwarfs their peers in the corporate space. While their business intelligence market share is a modest 5%, they command an astonishing 67% of all corporate Bitcoin holdings.
67%. Dominance is an understatement there.
This unique, dominant position in digital assets not only protects profitability through premium valuations, but also, of course, means they navigate the inherent and often sharp challenges of crypto volatility.
This brings us to a crucial question for you as an investor. What truly underpins their competitive moat? Why is it so difficult for others to replicate their success? There are multiple reinforcing layers to their advantage.
Okay, let's break down that moat.
First, economies of scale. Holding vast amounts of Bitcoin, as they do, leads to significantly reduced per-unit costs, particularly for complex custody arrangements and transaction fees. Their $46 billion investment, which is now valued at $76 billion, clearly demonstrates an efficiency and scale that smaller competitors, such as Metaplanet, simply cannot match.
Bigger is cheaper, basically.
Essentially, yes, in this context. This allows them to execute their strategy with lower proportional overhead. Second, network effects. Their substantial Bitcoin holdings indirectly attract more investors who want direct exposure to Bitcoin through a publicly traded company.
The go-to stock for Bitcoin exposure.
Right. This influx of capital, in turn, facilitates raising even more capital for additional Bitcoin buys, as evidenced by the expansions of their at-the-market programs to an incredible $84 billion. Furthermore, the user growth in their business intelligence platforms, reaching millions globally, also amplifies through data ecosystems, creating a virtuous cycle of platform adoption.
Success breeds success, attracting more capital and users.
Third, counter-positioning. Strategy is uniquely positioned as what Michael Saylor often calls a Bitcoin development company. This means they're not just buying Bitcoin, they're actively building financial products and strategies around it.
They're leaning into the Bitcoin identity, not just holding it.
Exactly. This offers a leveraged exposure that most traditional competitors, risk-averse or structurally unable, simply avoid. They've embraced what others fear, including offering preferred stocks with attractive Bitcoin-linked yields, which further differentiates them. Fourth, branding. The strong brand associated with Bitcoin itself, largely amplified and built by Michael Saylor's tireless advocacy, imbues Strategy with significant pricing power. This is reflected in their stock often trading at a premium over their underlying net asset value.
The Saylor premium.
A testament to the market's perception of their unique position and leadership. Fifth, cornered resources. They have demonstrated access to relatively cheap capital, securing convertible notes at remarkably low interest rates, like 0.625%.
0.6% interest is incredibly cheap financing.
Critically advantageous. They also benefit from access to top talent, often through Saylor's extensive network within the technology and Bitcoin communities. Additionally, they hold valuable patents in business intelligence, providing a foundational intellectual property advantage in their software division.
Okay, sixth.
Sixth, process power and timing. Their refined Bitcoin acquisition processes, particularly the strategic timing of their at-the-market offerings, create a distinct operational advantage. They hit the Bitcoin market perfectly in 2020, riding the ensuing bull runs with incredible precision and foresight. This wasn't luck, it was a disciplined, planned execution.
Right place, right time, but also right strategy.
Seventh, speed of execution. Their rapid acquisition pace, often making weekly purchases through those at-the-market offerings, significantly outpaces rivals. In a volatile, rapidly appreciating asset like Bitcoin, speed of execution is a critical competitive edge, allowing them to accumulate substantial positions before others can react.
Moving faster than potential competitors.
And finally, first-mover advantage. Being the first significant corporate player to pivot aggressively into Bitcoin treasuries created what we call a net asset value premium moat. They established themselves as the go-to public vehicle for Bitcoin exposure, solidifying their market position and making it incredibly challenging for newcomers to directly compete on scale and brand recognition. This multifaceted advantage makes their position incredibly resilient and difficult to replicate.
That's a comprehensive moat. With such a distinct and pioneering strategy, it's natural to ask, what does the future hold for strategy? What are their concrete pathways to continued growth? And equally important, what are the potential pitfalls and risks that you as an investor should vigilantly watch for?
The growth story and the risks involved, yes.
Strategy has a remarkably clear blueprint for continued expansion across multiple fronts. Their core growth strategy undeniably involves expanding their Bitcoin holdings through further strategic capital raises, such as the potential $20 billion in at-the-market supplements they've announced.
More Bitcoin accumulation is definitely planned.
But it's not just about Bitcoin accumulation. They also aim to penetrate existing and new business intelligence markets more deeply, particularly with advanced artificial intelligence integrations. Furthermore, they are committed to developing innovative new products, including those dedicated Bitcoin analytics tools we discussed earlier, creating a holistic growth narrative.
Absolutely. The key drivers for their future growth are multifaceted. We're seeing continued market penetration for their software, evidenced by a robust 21% increase in software subscriptions. This shows their traditional business is far from stagnant.
21% growth in software is quite healthy.
It is. They also have their sights set on expansion into new markets through broader global Bitcoin adoption. As more institutions and individuals embrace digital assets, strategy stands to benefit. Product development continues to be a focus, with explorations into advanced concepts like Bitcoin staking.
Staking, earning yield on their Bitcoin holdings.
Bitcoin staking, for those unfamiliar, is essentially locking up Bitcoin to support a network's operations, potentially earning rewards, which could add another yield-generating layer to their model. Significant opportunities truly lie in new geographies, particularly the burgeoning adoption of Bitcoin treasuries in Asia.
Asia is a huge potential market,
where corporations are increasingly looking to diversify and hedge against traditional financial risks. We could also see potential mergers and acquisitions of other smaller Bitcoin-focused firms consolidating their market leadership. While risks like evolving regulation in different jurisdictions certainly exist, the potential rewards from their Bitcoin yields, which they are targeting at an ambitious 25%, are substantial.
Can you draw any parallels to other successful companies?
There are compelling parallels to consider here, such as Warren Buffett's Berkshire Hathaway. Buffett famously used the insurance float, the premiums collected but not yet paid out, to fund his vast long-term investments.
Using one part of the business to fund another.
Strategy is employing a similar principle, using low-cost capital from debt and equity offerings to fund investments in what they believe is the premier appreciating asset of our time. This demonstrates how capital can be recycled for powerful compounding growth.
And the market potential.
The applications of Strategy's model are broad. Their business intelligence solutions can be applied across virtually any industry, from healthcare to retail. And crucially, the Bitcoin treasury model is fundamentally scalable to virtually any corporation globally that seeks an inflation hedge or a new form of treasury management.
So the potential reach is massive.
The total addressable market is truly vast. The business intelligence market alone is valued at over $100 billion, and the Bitcoin treasury market, as more corporations adopt this model, could potentially exceed $1 trillion by 2030. Strategy, through its pioneering leadership and aggressive accumulation, is incredibly well positioned to capture over 10% of this emerging market.
No investment, no matter how compelling, is entirely without risk. And a pioneering strategy as bold as this certainly has its unique challenges and potential vulnerabilities. But the question becomes, how resilient is this model, and what are the main factors that could genuinely impact its trajectory, both positively and negatively?
Assessing the resilience is key.
On the resilience front, the company demonstrates remarkable strengths. It has minimal physical supply chain dependencies, which provides a significant degree of insulation from the types of traditional economic disruptions that plague many other industries.
Less exposed to typical supply chain shocks.
Furthermore, its massive Bitcoin holdings are not concentrated in one place, but are strategically diversified across multiple custodians, significantly mitigating the risk of hacks or any single point of failure.
Diversified custody is crucial.
And on the business intelligence side, their customer diversity spans various industries and geographies, while their treasury investors are global. This broad diversification collectively reduces concentration risk, meaning they are not overly reliant on any one client, region, or even a single institutional investor.
While the company's competitive advantages are indeed sustainable through their sheer scale and innovation, they are not entirely invulnerable. These advantages could certainly be eroded by a significant prolonged Bitcoin price crash.
The big elephant in the room, Bitcoin's price?
Or by the emergence of truly effective copycats, though replicating their scale and first-mover advantage would be incredibly challenging, as we discussed with companies like BMNR. However, this is where strategy demonstrates a significant and compelling degree of anti-fragility.
Anti-fragility, meaning they benefit from chaos.
This is a concept popularized by Nassim Nicholas Taleb, describing something that doesn't just withstand shocks, but actually benefits from them. Bitcoin volatility, particularly sharp price dips, actually strengthens their position. Why? Because it enables them to acquire more Bitcoin at lower costs, effectively buying the dips.
So price drops are buying opportunities for them.
They've already proven their ability to thrive in chaotic market conditions, as powerfully evidenced during the brutal 2022 bear market for Bitcoin, where they continued to acquire, strategically building their position. Their longevity is further bolstered by their strong alignment with powerful secular trends, like global digitization and the increasing need for inflation hedging in a world of expanding money supplies.
Writing major long-term trends.
Bitcoin, with a high probability around 90% based on expert consensus of enduring as a global digital store of value, underpins this long-term view. The company also weathers broader economic downturns effectively thanks to that steady software cash flow,
That reliable engine again.
which provides a reliable base to cover operational costs and interest payments, giving them staying power during economic contractions. When considering the main risks to their continued growth, the most obvious are the inherent Bitcoin price volatility, which can be intense, and the evolving regulatory landscape in the crypto space, which remains a known unknown.
Regulation is always a wild card.
Additionally, potential competition from other digital asset treasuries, such as those that might focus on alternative cryptocurrencies like Ethereum, could emerge. Looking at known unknowns, we must account for the impact of future Bitcoin halvings on price. These events reduce the supply of new Bitcoin, historically causing price surges. But the exact impact and timing are always speculative.
The halving effect isn't guaranteed.
Also, the potential for debt refinancing at higher interest rates in a changing macroeconomic environment could impact their cost of capital. And then there are the unknown unknowns, those truly unpredictable factors like sudden, widespread geopolitical bans on Bitcoin or the theoretical emergence of quantum computing threats that could potentially undermine current cryptographic security.
The black swan events.
These are, by definition, impossible to quantify, but warrant consideration.
Now let's bring this groundbreaking model down to earth with some hard numbers. What do the current financials actually tell us about Strategy's health and trajectory? And how is the market, particularly you, the individual investor, reacting to this bold and unprecedented experiment in corporate finance?
Let's dive into the financials.
Looking at the latest data, Strategy's financials present a picture that is simultaneously stable and, in certain aspects, absolutely explosive. As of the second quarter of 2025, their core software revenue demonstrated solid, if not spectacular growth, up 2.7% year over year to $114.5 million.
Modest growth on the software side.
Think of it like a meticulous farmer who diligently plants and tends to their fields each season, representing the consistent, predictable software business. This provides a steady harvest. But at the same time, this same farmer has unexpectedly discovered a vast, incredibly abundant vein of gold deep beneath their land, representing the massive gains from their Bitcoin holdings.
One provides stability, the other provides extraordinary upside. The financial impact of that gold vein is truly remarkable. Their profit margins have exploded to an astonishing 750% from Bitcoin gains, flipping prior losses into a substantial $10 billion net income.
8,700% margin. That's just unreal.
To give you a real sense of what that means, if a traditional software company had this kind of profit margin, it would be a complete outlier indicative of a monopoly. While Strategy's software growth is 3%, applying the rule of 40%, a common benchmark in software as a service, SaaS, pronounced SaaS companies, which states that a healthy company's revenue growth rate plus its profit margin should collectively exceed 40%. Their software growth of 3%, combined with these exceptionally high Bitcoin-driven margins, absolutely blows past that 40% threshold.
So the overall model is incredibly profitable by that metric.
This signals an extraordinary product-market fit for their overall unique business model, where Bitcoin drives the headline numbers and profit generation. The return on invested capital, or ROIC, is around 200% due to the powerful leverage they employ on their Bitcoin holdings.
200% ROIC, incredible efficiency.
This is an incredible measure of how efficiently they're using capital to generate returns. The company maintains a healthy $50 million in cash on hand while managing $8.2 billion in debt. Crucially, their debt-to-equity ratio is approximately 0.11 relative to their Bitcoin net asset value.
So the debt is small compared to the Bitcoin value.
Which indicates that their debt, while substantial, is very well covered by the value of their assets. A current ratio greater than 1 also signals robust liquidity, meaning they have enough short-term assets to cover their short-term liabilities.
Financially stable despite the debt load.
Their book value, reflecting the underlying value of the company's assets, grew by over 1,000% year-to-date, a staggering increase. Free cash flow, while variable due to the opportunistic nature of their Bitcoin acquisitions, remains positive from their core operations, confirming their financial viability.
The core business generates cash.
Specifically, regarding their Bitcoin treasury, they currently hold 628,946 Bitcoin. This has contributed to a yield of 13.7% year-to-date from their Bitcoin positions alone, leading to an impressive net asset value of $74.7 billion.
13% yield just from Bitcoin appreciation so far this year.
When compared to peers, Strategy significantly outperforms traditional business intelligence competitors like Tableau, which might only see around 10% growth. This outperformance is almost entirely attributable to its Bitcoin strategy. While some emerging Bitcoin treasury peers like BM&R might momentarily show a higher market-to-net asset value ratio, they simply lack Strategy's unparalleled scale, operational efficiency, and capital-raising capabilities.
Scale matters here.
The overall trend in their financials clearly shows stable and growing software revenue as the foundation, but highly volatile, yet consistently and significantly rising, profits driven by Bitcoin. This implies that a Bitcoin bull market massively sustains growth, though some, of course, argue for further diversification to mitigate asset concentration risk.
The market, especially among individual investors, is in a constant state of buzz about Strategy. What are the latest developments shaping this narrative, and what's the prevailing sentiment on the digital town squares?
What's the street saying, basically?
Recent notable events include the official name change to Strategy on August 11th, a move that clearly cemented their commitment to the Bitcoin First vision. Then there was that $18 million Bitcoin purchase we discussed earlier, showcasing their ongoing accumulation. And of course, the second quarter earnings report was a standout, highlighting that astonishing $10 billion income driven by Bitcoin. Looking ahead, investors should keep a close eye on potential expansions of their at-the-market offerings, which provide continuous opportunities for them to acquire more Bitcoin.
More potential dilution, but also more Bitcoin.
We also anticipate previews of Strategy World 2026, where they'll likely unveil more integrations between AI and Bitcoin. And on a broader macroeconomic level, you should definitely monitor future Bitcoin halvings, those program supply reductions, and any potential interest rate adjustments by the Federal Reserve, as these broader factors will certainly play a significant role in Bitcoin's price and thus Strategy's performance.
You're right. The conversation around Strategy is vibrant, especially among individual investors on platforms like X. There's a strong, often fervent, bullish sentiment regarding Strategy's Bitcoin acquisitions. Investors frequently use phrases indicating significant upside potential, praising the leveraged exposure that the company provides.
They see it as a smart way to play Bitcoin.
They see it as a smart, amplified way to ride the Bitcoin wave without directly managing the crypto themselves. However, it's not all sunshine and rainbows. Some concerns persist, particularly around their market-to-net asset value ratio, which stands at 1.69.
1.69, so trading at a 69% premium to its Bitcoin assets.
Roughly, yes. This is seen by some as quite high, especially when compared to peers like SB, which has a ratio of 0.87. This ratio basically indicates how much the market is valuing the company above its core assets. A higher number suggests the market has priced in a lot of future growth or uniqueness.
So bears see that as a sign of overvaluation.
Positive narratives frequently highlight Michael Saylor's visionary leadership and the company's impressive Bitcoin yields, which are widely seen as outperforming traditional exchange-traded funds focused purely on Bitcoin. On the flip side, negative sentiments often revolve around fears of dilution from those at-the-market offerings.
The dilution concern again?
Where new shares are issued, potentially diluting existing shareholders. There are also comparisons to risks observed in other Bitcoin Treasury companies like BMNR, which haven't performed as consistently. A more neutral perspective often includes discussions around complex option strategies, such as using 10 delta calls.
Okay, what are 10 delta calls in layman's terms?
For those unfamiliar, a call option gives you the right to buy a stock at a certain price. A 10 delta call is a very out-of-the-money option, meaning it's not likely to be profitable unless the stock moves significantly higher, but it's a way to gain highly leveraged exposure to potential massive upside with limited downside risk if the stock doesn't move much. It's a speculative bet on a big move.
A high-risk, high-reward play.
The dominant narrative among investors, however, is one of optimism about the potential for a genuine Bitcoin revolution in corporate finance, tempered by a realistic awareness of volatility and the risks associated with such a pioneering approach. It's even captured in community memes, like MSTR Bloodborne, which symbolizes resilience and perseverance in the face of challenging market conditions, much like the challenging video game it references.
Given such a unique company, one that truly blends traditional enterprise software with a pioneering digital asset treasury, traditional valuation methods simply don't quite capture the full, nuanced picture. So how do we, as individual investors, approach valuing strategy? What specific metrics and frameworks should we consider, and what does it all mean for your investment decisions?
Valuation is tricky here for sure.
Valuing strategy demands a truly nuanced approach, one that carefully blends conventional financial metrics with its groundbreaking Bitcoin innovations. This approach is absolutely essential to empower you, the individual investor, to make truly informed decisions.
You need the right tools for the job.
The current price of the stock stands at $396.76 as of August 12, 2025. A critical concept here, one championed by legendary investors like Warren Buffett, is the margin of safety.
Buying with a buffer.
This means buying an asset at a price significantly below its intrinsic value. This discount provides a crucial buffer against unforeseen risks, much like Buffett's principle of a company having a wide defensible moat. For a company as dynamic and tied to a volatile asset like Strategy, aiming for a substantial 20–30% discount to what you perceive as its intrinsic value is essential to guard against significant Bitcoin price drops.
Especially with this kind of volatility.
Ultimately, a thorough understanding of valuation reveals if Strategy's current $110 billion market capitalization overpays for its $76 billion Bitcoin net asset value, or conversely, if the market actually undervalues its truly revolutionary business model and future potential.
Understanding why valuation matters in this unique context is paramount. It's not just an academic exercise. It's about assessing whether the company is over or undervalued at any given moment, thereby directly guiding your investment decisions.
Does the price make sense, basically?
For Strategy, it specifically helps you determine if the extraordinary Bitcoin yield they generate truly justifies the premium their stock currently commands. When we look at various valuation methods, we have to employ a multifaceted approach.
Okay, what methods can we use?
First, intrinsic valuation. This method attempts to determine the true underlying value of a company. For Strategy, this involves performing a discounted cash flow analysis on their core software business. We'd estimate its steady recurring revenue around $500 million annually with a projected 10% growth rate and project its future cash flows.
Value the software business on its own.
Then we combine that valuation with the current net asset value of their Bitcoin holdings, which stands at $76 billion, with Bitcoin trading around $120,000 per coin. When you sum these parts, this intrinsic approach yields a base value of approximately $500 to $600 per share, giving us a foundational benchmark.
So intrinsic value potentially higher than the current price.
Based on this method, yes. Second, relative valuation. This compares strategy to similar companies or industry benchmarks. Traditional price-to-earnings, PE ratios, become less relevant here due to their wildly distorted earnings per share, which registered an astounding $32.60 primarily from those Bitcoin gains.
PE is basically useless here.
Pretty much. Instead, comparisons are more often made to other Bitcoin treasury companies, like BMNR, which currently trades at a market-to-net asset value ratio of 1.34. This comparison helps us gauge how the market values Strategy's Bitcoin holdings relative to its peers. Strategy's 1.69 ratio is higher.
Suggesting a higher premium for Strategy compared to BMNR.
Third, and perhaps most illuminating for Strategy, is advanced valuation. Here, the Bitcoin yield is a key metric. They've achieved a 13.7% yield year-to-date against their ambitious 25% target.
Focusing on the return generated by the Bitcoin.
For companies like Strategy, the market-to-net asset value ratio of 1.69, or a sum of parts valuation, where the software business is independently valued, perhaps around $10 billion, and then combined with the value of their Bitcoin holdings, are particularly useful. A yield-based valuation, which looks at the stock price relative to the yield generated, suggests a price-to-yield ratio of approximately 4x for a company aiming for a 25% yield.
A 4x multiple on a 25% yield. What does that imply for price?
This sophisticated model implies a potential share price of $1,000 per share if Bitcoin itself reaches $200,000. Each method offers a different lens, but together they paint a comprehensive picture of Strategy's value.
When it comes to a company as groundbreaking and unconventional as Strategy, the market consistently presents two very distinct yet equally compelling arguments for its future trajectory. It is absolutely crucial for you as an investor navigating this unique landscape to deeply understand both the bull and the bear perspectives and to consider the probability of each.
You need to hear both sides of the story. Let's lay out both sides, starting with the bear thesis, and we'll steelman it, meaning we'll present it in its strongest, most logical form, even if we don't personally agree with it.
Okay, the argument against Strategy.
From an institutional investor's view, the company is often seen as dangerously over-leveraged, carrying $8.2 billion in debt. The fear is that this substantial debt risks insolvency if Bitcoin were to experience a severe and prolonged drop, potentially falling below, say, $40,000.
A crash could trigger margin calls or forced selling.
Such a scenario could force the company to sell Bitcoin at a loss or lead to further shareholder dilution through additional at-the-market offering, like the 115,000 shares they sold in August 2025, which would devalue existing shares.
And the individual investor view.
From the perspective of individual investors, particularly those discussing on platforms like X, a high market-to-net asset value ratio of 1.69 is frequently seen as a classic bubble indicator, suggesting the stock is trading far above its fundamental value. There's also the argument that the relative stagnation in their core software growth at 2.7% is often ignored or overlooked due to the immense hype surrounding Bitcoin.
Ignoring the fundamentals of the software business.
The core concern for this bear case is that regulatory changes or even future Bitcoin halvings not driving the expected price increase could cause a devastating price crash. This scenario is considered more probable by bears if Bitcoin's price were to stagnate or enter a prolonged bear market for an extended period, leading to a liquidity crunch for Strategy.
Makes sense. Now, the bull case.
Now, let's consider the equally powerful bull thesis. From an institutional perspective, Strategy's leverage to Bitcoin play is seen as incredibly innovative, yielding over 25% annually on its Bitcoin holdings. They view it as a revolutionary approach to capital markets, particularly through the introduction of unique financial instruments like their preferred stock offerings, such as the substantial $4.2 billion offering.
Institutions see the yield potential and innovation.
This demonstrates that sophisticated capital is willing to fund this vision. For individual investors, particularly the highly engaged community on X, this perspective highlights Michael Saylor's undeniably visionary leadership. They point to the astounding 3,000% 5-year return since 2020 as undeniable proof of the strategy's success.
Hard to argue with those returns.
And they emphasize the crucial first-mover advantage that has created significant, almost unassailable competitive moat. The core belief driving this bull case is that Bitcoin is on an inevitable path to reach $200,000 or even higher.
The underlying Bitcoin price appreciation thesis.
If that happens, it's expected to push Strategy's stock to $1,000 per share, or significantly more, given the company's leveraged exposure. This bull case, in the context of the underlying Bitcoin narrative driven by scarcity and increasing global adoption, is widely considered the most probable outcome. It aligns perfectly with Strategy's disciplined execution and its unique financial structure.
So the bulls believe the premium is justified by the future potential.
So, based on this bull thesis, the question becomes, is Strategy currently trading at a discount or not? The argument is that yes, it is currently trading at a discount when you consider its full potential. A market-to-net asset value ratio of 1.69, while seemingly high to some, actually undervalues its projected yield potential of 25% from its Bitcoin holdings.
The yield potential makes the premium look small.
Exactly. This implies a fair value significantly above $600 per share based on current conditions, let alone future Bitcoin appreciation. For you, the astute investor, this suggests a tangible opportunity to acquire an edge by understanding this nuanced, forward-looking valuation. It's about recognizing the future profitability embedded in their unique approach.
So after meticulously examining every facet of this extraordinary company, its radical transformation, its unconventional business model, its operational strengths, future prospects, and financial narrative, we return to our central question. Is Strategy truly revolutionizing capital markets?
The big question.
Synthesizing all the arguments, the resounding answer is unequivocally yes. Strategy is indeed revolutionizing capital markets through its innovative Bitcoin Treasury model. This isn't just a bold claim, it's a demonstrable truth affirmed by its profound transformation of corporate finance into a highly leveraged, yield-generating machine.
They've shown it can be done.
By strategically accumulating an astounding 628,946 Bitcoin, which now represents nearly 3% of the total Bitcoin supply, and funding this massive acquisition through $46 billion in incredibly innovative instruments like low-interest convertible notes and flexible at-the-market equity offerings with an $84 billion capacity strategy, has created a repeatable blueprint for converting traditional corporate debt into substantial digital asset appreciation.
A blueprint others might follow.
This financial revolution democratizes access for you as an investor in a powerful way. For retail investors, it provides significant leveraged Bitcoin exposure without the complexities, risks, and technical challenges of directly holding or securing digital assets yourself.
Easier access to leveraged Bitcoin.
Simultaneously, for large institutions, it opens up entirely new avenues to gain exposure to Bitcoin through more familiar, regulated financial products like preferred stocks, which are currently yielding an attractive 8–10%. This blends the traditional fixed income stability with the exponential upside potential of digital assets.
Bridging TradFi and crypto for institutions.
The efficacy of this pioneering model was powerfully demonstrated in the second quarter of 2025 when a staggering $13.2 billion in unrealized Bitcoin gains flipped prior operational losses into a remarkable $10 billion net income. As Bitcoin's inherent scarcity, powerfully accentuated by its programmed halvings, converges with accelerating global adoption waves, Strategy's unique approach is poised to significantly outpace traditional corporate treasuries.
They're positioned for the long-term trend.
This could, in turn, inspire over $1 trillion in corporate Bitcoin holdings across the globe by 2030, fundamentally reshaping how companies manage their balance sheets.
To boil down to first principles for you, the individual investor, Bitcoin's fixed supply of 21 million units is inherently superior to inflating fiat currencies, which are constantly being diluted. This offers a powerful, asymmetric edge for investors seeking to preserve and grow their wealth.
The core Bitcoin value proposition.
The core strategy, as demonstrated by Strategy, is to hold through volatility. This is because halvings, which cut the rate of new Bitcoin issuance every 4 years, have historically driven incredible 200% plus price cycles, demonstrating a predictable supply shock. Strategy amplifies this fundamental Bitcoin thesis by brilliantly leveraging cheap capital.
Using debt to juice the returns.
They've secured notes at incredibly low interest rates, like 0.625%, to acquire Bitcoin, achieving remarkable 25% yields on their Bitcoin per share, which currently stands at approximately 1.79 per 1,000 shares. This represents a significant information asymmetry for you compared to unaware corporations whose traditional cash reserves are silently eroding at rates like 7% annually due to inflation.
So what's your edge as an investor here? How do you use this?
One practical step is to diligently monitor Strategy's market-to-net asset value ratio on a weekly basis. If it falls below 1.5, it signals a significant discount relative to their underlying Bitcoin holdings, offering a strategic buying opportunity.
Look for dips in that premium.
Also, be aware that recent accounting shifts, such as the new fair value marking for Bitcoin, now boost their reported earnings, which may be undervalued in traditional price-to-earnings analyses that don't fully capture this new profit dynamic. While Strategy's $8.2 billion debt certainly magnifies risks in bear markets, its resilience is evident.
How resilient?
Their balance sheet is structured to withstand an 80% Bitcoin price drop, as explicitly detailed in their second quarter filings. This anti-fragility stems from their steady software cash flow, which reliably covers interest payments, allowing the company to strategically turn market shocks into opportunistic buying periods for more Bitcoin.
They can survive a deep crypto winter.
Bitcoin's expanding network effects, projected to reach over 1 billion users globally, further ensure its longevity and continued outperformance compared to traditional stores of value like gold, which often suffers from stagnation. To genuinely outperform, recognize Strategy as the primary and most direct corporate proxy for Bitcoin.
The #1 Bitcoin stock.
If you subscribe to the bull thesis of Bitcoin reaching $200,000, then Strategy stock could realistically hit $1,000 per share, or even higher, due to its leveraged structure. But for an even sharper edge, for those with a more advanced understanding, consider exploring option strategies, such as using very specific out-of-the-money call options.
Those 10 delta calls again.
These are options that offer a way to gain highly leveraged exposure to the stock's upside, and when managed strategically, can yield significant returns through tactical roles. From a first principles perspective, consider diversifying a portion of your portfolio, perhaps 10–20% into positions like this, and closely track Bitcoin halvings for optimal entry points.
Any less discussed edges?
An additional less discussed edge lies in the broader geopolitical landscape. If major nations were to adopt Bitcoin as a reserve asset, or if policies like those proposed by the Trump administration gain traction, Strategy's model could scale globally, potentially multiplying its net asset value significantly and creating unprecedented wealth for its investors.
Geopolitical shifts could be a massive catalyst. In sum, what we've unpacked today confirms that Strategy's financial revolution is unequivocally real. It serves as compelling proof that a Bitcoin Treasury model can indeed deliver superior returns, a fundamental truth for those who believe in the enduring power of digital scarcity in an inflating world.
The proof is in the pudding, as they say.
For you, the individual investor, this provides an invaluable asymmetric advantage. By focusing not just on Bitcoin's price, but on the powerful yield generated from Strategy's strategically acquired Bitcoin holdings, you can potentially front-run the institutional wave that is surely gathering force, setting the stage to dramatically enhance your portfolio as capital markets continue to evolve and indeed are being fundamentally rewritten right before our very eyes.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.